For more on this, we're joined by Tim Waterer in Sydney. He's Chief Market Analyst at KCM Trade. Welcome back to the programme, Tim. Now, trade tensions are once again dominating headlines, and from what we can see, investors are taking caution.
Nice to be with you again. Yes, that's right. Caution was the order of the day across Asian markets, and really taking a lead from the US futures, which are fairly deep in the red at the moment. And that's because, once again, we have an uncertain economic international trade picture based on the recent threats by Trump to NATO allies over Greenland. So we know that he has threatened the initial one of 10%, but that could raise to an additional 25% around mid-year if there's no progress made. So markets aren't yet pricing in a worst case scenario because I think 25%, that would be a lot of economic pain for Europe. So I think the direction we're seeing by markets at the moment, yes, it's risk aversion, but it's not full-blown panic mode right now, because I think traders are waiting to see if we get some sort of resolution, even potentially this week on the sidelines of Davos, perhaps. So let's see.
So how significant are these threats to Europe currently?
Well, I think they are significant and they are being taken seriously. What financial markets are taking some heart from is that we do have a Trump playbook to work from, which is that we do get the initial tariff threats, and then there is usually room for negotiation, leading to a more palatable level in terms of tariff levels for the market to absorb. So I think that's what markets are hoping for this time around, is that we will get some progress. Maybe one side will give ground and there will be a compromise sought. So that's what the market is hoping for. Let's see. But the uncertainty right now is how long will that process take? Are we talking days, weeks, or even months? Will that first 10% level of tariffs, will that kick in before we get some progress in terms of negotiations? So it's really that uncertainty which is driving risk aversion in the market right now.
Right, and gold has climbed to a new record amid all this uncertainty. And beyond metals, where are investors hiding right now, and what does it tell us about market anxiety?
That's right, precious metals, that's a favourite right now in terms of a store of value, given the prevailing uncertainty. In terms of stocks, the usual safe haven plays there are doing quite well this week. So healthcare stocks, utilities, they're outperforming the broader market as traders are turning shy on some of the high yielding stocks, which have done well, certainly last year in 2025. In the FX space, we're seeing the Japanese yen claiming its mantle as a safe haven currency and clawing back ground against the US dollar. Swiss franc, another safe haven favourite, doing well. And we're also seeing a shift away from equity markets into treasuries, once again, as a defensive play, until we see how this latest spat between Trump and some NATO allies plays out.
Tim Waterer in Sydney, thank you very much for your analysis.